Your mortgage guy Brian here with some great information to help you navigate the mortgage process. Now there's a term floating around the financial world that a lot of people don't quite understand. So today what I want to accomplish is for my borrowers to understand what the blended rate is. And for a lot of you, why even though you have a very low mortgage rate because you refinanced, in 2020, 2021, that even at a 2 to 3% interest rate, why knowing your blended rate might be beneficial to having you still refinance even as mortgages creep up into the 6s and 7s. So what is a blended rate? It's a weighted average of 2 or more amortizations and the total balance of those combined into a single balance. There are a lot of online calculators that can help you to determine your blended rate, so I'm not going to get into the math of it, but I will put one mortgage calculator that does blended rates down in the comments below. So I have an example of a borrower who came to me who was saying, Brian, I have a really low mortgage rate. I don't think it makes sense to take care of all my credit card debt right now. They had a mortgage rate at 3.75%, and they actually had about $50,000 in credit card debt that they were holding on to. They couldn't make the monthly payments, so they were actually seeing those balances start to creep up more and more. Now, going through the blended rate calculations with them, I let them understand that even though they had a 3.75% mortgage rate, when you put all of their debt together, they were actually at 8.5% with a blended rate. And that obviously is higher than where rates are currently at in the 6s and 7s. So what I had my borrower do is I walked them through these calculations and I let them understand that they were paying about $20,000 a year in interest amongst all of their obligations. We then put them into a refinance that took all of that debt and put it all in the mortgage. So they had a $250,000 mortgage. They were up at 6 3/4 in the interest rate, but their annual interest that they were paying actually dropped down to a little under $17,000. This is about $5,000 a year in interest payment savings. The other added benefit is that they got rid of all of their credit card debt, which is great, and it freed up about $300 in cash that they would have been putting towards credit cards every single month. My borrower was able to take that money, put it back towards their mortgage, and they're actually going to pay off their mortgage 10 years faster than they would have otherwise. The biggest added benefit is by getting rid of all of this credit card debt, they're actually going to see their credit score start to increase. Meaning the next time they go to buy a home, buy a car, refinance with me, they're going to have an opportunity to get an even better interest rate thanks to their higher credit scores. So although a lot of people are going to say, Brian, mortgage interest rates are rising, I don't think now is the right time to do something, I'll wait till they get better. What they don't realize is by knowing what your blended rate is, it still may be a good opportunity to refinance and put all of that debt into a lower mortgage interest rate than what you're paying on those 20 to 30% interest credit cards. So if you have any questions, please make sure to comment below. And also follow Your Mortgage Guy Brian at YourMGBrian on Instagram, Facebook, Twitter, and here on YouTube. And that way you can find out when all of my new videos come out.